I manage what has been reimagined as the investor experience this year at HR Tech. And one of the things that I have a line of sight to is how many individuals are registered as investors. And it could be somebody from Goldman Sachs, and it could be an independent investor who is interested in an angel round. And the final number this year was 220 just at HR Tech. But that's not the whole number, because you had to raise your hand and tell us that you're an investor. Many just grab an expo pass. So I'm going to guess there were 300 to 400 investors. The angels don't tend to identify themselves. So just from that perspective, that's a massive ecosystem just around one event.
Welcome to the HR Huddle podcast, presented by Sapient Insights Group, the ultimate resource for all things HR. It's time to get in the huddle.
Welcome to Spilling the Tea on the HR Tech, where we focus on the hottest HR Tech news everyone needs to know to be in the know. And this is a extra special session that we're doing today because we have a visitor with us and guest who will be talking about where we're heading in the market. What we do in our podcast is we break down the news of the week. And so this is going to be a little bit broader than the week. This is going to be what we're seeing over the next couple of months and in the next couple quarters, and we help you make sense of what it means for our industry and how it can impact your organization. I'm Stacey Harris. I'm your host, the Chief Research Officer and Managing Partner for Sapient Insights Group. We are a research and advisory firm if you have not worked with us previously. And joining me today now is not just Cliff Stevenson, my Director of Research and Principal Analyst for Sapient Insights Group, but also George LaRocque, who is the owner of WorkTech. And did I say that correct? Is WorkTech the actual name of the company, George? Maybe I'll let you sort of define what you do and do a little intro for yourself, because our audience doesn't know you, but they hear us talk about you a lot.
Right. We often say friend of the show, we mean it.
Well, I'm honored, and friend of the show. It is WorkTech. There is an LLC over WorkTech, but we don't need to get into any of that. And yeah, I'm excited to be here. I've been looking forward to this, and it's always fun with people that I respect and data that I use all the time to look into the future. And I frame WorkTech I use similar words: market intelligence and advisory. I think where we align on the markets that we look at, and where we're a little different is I'm looking at growth capital, and I'm looking at more like market sizing from a total addressable market perspective, and my advisory tends to be through a similar kind of lens as well. So I'm excited to compare notes.
Yeah, we're really excited. And Cliff and I, when we first started talking about the idea of this, and you and I were talking about it, is we've worked on it with a couple of clients together where we had two pieces of the pie that they needed. And we thought this would be a great opportunity to maybe talk about how we view the world and how maybe even the market of the analysts and advisors is kind of changing right now, because everything's kind of shifting. AI doesn't just change HR, and it's not just changing the global market, it's changing our world too, right? And so maybe we'll talk a little bit about that. And then also, Cliff, you and I have talked a lot about the fact that the idea of data and how it's used inside of organizations is shifting as well. Like, are you using this to benchmark? Are you using this to help you make decisions about growth? Are you using this to help you make decisions about investments? I think that would be a great thing to maybe wrap up today with, is how do people think about leveraging the different data sets that we know people are using all the time, and what are they doing with them? Because I think sometimes I get questions like, well, this will help me make decisions about the technology, but now I also have to make decisions about how much I'm going to spend on the technology, right? Or now I need to understand, is this a vendor stable because now they've just been bought or acquired or invested in, right? And is our data helpful in helping that make decisions? I know some of your stuff gets into that, George, right? So there's a lot of things I think that the market does, like we provide data, and how people use it is different, right? So that is our agenda for today. If everybody's interested in hanging in and having a conversation, if you have additional questions after you listen to us, please send them in. We're excited to hear them. But maybe we'll start off with talking a little bit about George. I know you said kind of broadly what you do, but you do publish sort of an annual sort of or a series of quarterly reports, right? Could you maybe just talk a little bit about what you publish, and then maybe we could sort of do the same and talk a little bit about the annual report that Cliff and I do each year.
Yeah. So every quarter, I do a look back on the quarter and I look at day activity. I look at all the growth capital coming into the space. It is all, I go down right now, I'm at about 60 subcategories that fall under HCM, talent acquisition, or talent management. And I started doing this about 8 years ago as I was watching what was happening in the market and then seeing sort of there are a group of companies like Crunchbase and PitchBook and CB Insights that have all this data, and they would come out with these reports. And in fact, there was just one this week from Crunchbase saying investment in HR tech is hot. And um,
Someone who
Jason,
sent that to us, yes.
yeah,
Is this
and
valid?
yeah,
Like, I'll ask George.
but I looked at it and I commented and I said, they're directionally accurate, but I'm seeing in some cases 2 times as much activity. And it's not just having the data, but having the tools and knowing where to put it. And 8 years ago, I tested that and I realized, okay, I am seeing a lot more. And it's been the same for 8 years. I think we're so unique as a niche market that it's difficult for them, or maybe they don't care about being more than directionally accurate. Maybe that's it. But there's that, and then so at the end of the year, I'll do the annual. I'll look at Q4 and I'll look at the year and how that compares looking back and the momentum looking forward. At the same time, I do look at the, what's happening with the tech and what's happening from a macro trend perspective, how that's impacting things. I read in with the investors and understand what are they focused on, what are they interested in, and I look at your stuff and as much as I can consume to understand adoption, right? So it's usually pretty well aligned, as it should be. The trends that you see usually align pretty well with where the investors are, and that allows me to paint one nice picture about how the size of the market, the investment activity, the M&A activity, the adoption, and sometimes one is a leading trend for the other. So the investors are all focused here, but Sapient, watch out, Sapient showed us a little, a drop here or there in a market segment or category. So that's my approach.
And I think it really is balanced. I think one time you and I had worked on a project together where we had, someone had asked us for a PEPM average, right? And you kind of had some of your numbers and data from what you were seeing from the market, and we had our data that all the and for those who don't know, PEPM is per employee per month cost on a application area, and we get that on every application area that we cover, which is we have 54 individual categories, and I think we tracked this year that goes down to like 60 some sub things. But so similar to you, what we found is we were pretty close. Like we were a couple dollars off on each side of it, which I was like, I'm a big proponent of. I actually buy other people's data from time to time to validate, to make sure we're in the right range, to make sure there's not something wonky going on in our data, right? And so I really like that. For the audience that might not be, because our audience is very much a lot of times a mix of practitioners, but vendors as well, and investors. But there are some people who don't understand when you talk about cap investments. Like, is that all funding for new companies? Do you cover the big companies with investments? Like what does that look like for someone who's just a novice in this space and doesn't know what you mean by investments?
It's any investment that's coming into the space that is visible, backable. There are small, angel funding rounds that are like a pre-seed round, and the rounds go pre-seed, seed, A, B, C, D, and they just keep extending. I guess they'll have up to 26 of those, but it's and each of those represents a later stage. So pre-seed, you might have product, you're definitely building to fit the market need, product market fit. By seed, you're in market, you've got some level of revenue traction, although it may be early, and that early revenue may be helping you steer where you're headed. By the time you get to A, you're now still considered early stage, but now you're building the foundation to scale and you move into growth, which is all of these stages have become it's a common language we all have to track where a company is at, but they've become just meaningless in the last few years because I've seen seed rounds that are 10, $15 million, whereas traditionally it would be 1, 2, 3 million would be a good size. I've seen A rounds less than seed rounds. It really speaks more to, I think, maturity of the product, the investor's appetite, and so forth. So some are true early stage startups like those that you might see at the pitch fest at HR Tech. Some are later stage. They may be raising hundreds of millions from, a later stage VC or a private equity firm. And then it starts to, when private equity makes an investment, are they buying the company or are they buying a majority stake? Are they investing and taking a majority stake in the business? So to the degree that that's all shared, it's in the data, and it's difficult because there's no requirement. These aren't public companies, so there's no requirement to share this. So we're all looking at, as many data sources as possible and announcements. And so it's that's the universe that the investment is in.
It's really hard to sort of track. Like you said, none of that is public, right? And I think, Cliff, you and I, we do get some people who are interested in, they want to see sort of like adoption and growth in certain areas, especially if they're sort of planning to build out. So you said, product fit, that kind of thing. What I think we get a lot more questions of is like big firm investors who are doing investments in public companies. Like they want to know adoption numbers, who's possibly looking at, big growth numbers, where could they see dips and declines that could impact stock price. I know, Cliff, you and I work with, I think we have like maybe 6 big investment firms who do it, like hedge funds and, TD Cowen, those kind of guys, right? Who access our data, review it, and then will even like have us come and speak and publish on it, right? And I think a lot of people don't realize how big this industry is when you think about just from the seed funding to the amount of money that goes in at the enterprise investment level, right? For public companies.
Well, there are so many ways to look at that. I manage what has been reimagined as the investor experience this year at HR Tech. And one of the things that I have a line of sight to is how many individuals are registered as investors. And it could be somebody from Goldman Sachs, and it could be an independent investor who is interested in an angel round. And the final number this year was 220 just at HR Tech. But that's not the whole number because you had to raise your hand and tell us that you're an investor. Many just grab an expo pass. So I'm going to guess there were 300 to 400 investors that, the angels don't tend to identify themselves. So just from that perspective, that's a massive ecosystem just around one event. It goes well beyond that when you start to think about all of the investors who will, a banker who will get involved in an acquisition or an investment in a public firm that doesn't focus on our space, but has 1 or 2 transactions a year, or a venture capital somewhere in the world who does transactions here and there. It's massive, and this space continues to get more attention because of all of the, for every headline that gets attention around the future of work and the future of jobs, there's an investor saying, I wonder what tech is.
That'd be the next oil strike, right? Yeah, like
right.
They're trying to figure out how much money they can make out of it. Cliff, you track a little bit different because you do all of our podcast tracking for us on the number of acquisitions. I think last year, I could be wrong, but I think you calculated the number, at least that we talked about, was somewhere like 62 or something big acquisitions last year. Was it? I don't know if we got that number, if I got it right or not, but
yeah, and again, there's some subjectivity there because we don't always know the number amount. I know I just talked to Kevin Andrews, CEO of Venture Solutions, and they had 95 acquisitions just on their own. Now, there's going to be a whole lot of, quick scheduling type companies and things like that. But yeah, it is a growing market, and it's something, and I guess this is sort of talking about why we're here today, because these are conversations we've been sort of having in the hallways, and in the green room and stuff, talking about how the whole structure and how things are kind of all coming together, right? You mentioned all the different world of the information that goes into the investments. Then what do those investments mean? And, how will that affect, the buyers? How will that affect other investors and sort of that? So you sort of realize you need a whole smorgasbord of different types of resources, and people see things different ways. We might say there's Series A funding going to this, or there's this acquisition, and you might turn to George and WorkTech to say, okay, but how does that affect the market, or what should I know about that? What will happen? Let's use Thoma Bravo purchasing Force, for instance. What would that mean for me as either an investor, as a buyer, as an end user, practitioner, as a fellow analyst? And you start to say, okay, and what are the legal repercussions? And there are people that we use for that, and that that you can go to for that. So it's really just helping people understand the full picture, regardless of how you're coming to it. Because I'll admit that I'm taking notes when George is talking, because I was like, oh, I didn't know that. So it's all of these sort of factors that go into this sort of stuff. It's fascinating. And of course, another thing, I know we can touch on this a little later, but we talked about PEPM, but there's maybe even some shifts happening in how these things are paid for, especially in the world of AI and how that's affecting things. We're starting to see some different payment models even. We already are asking people in the survey, how exactly do you pay for your tech and your services, and how that all goes together. George, is that something you're seeing as well, as a sort of shift in how this is all meant to be paid for?
Yeah, it's a very active and controversial conversation, because it sort of starts with, SaaS is dead. And that's, if you're in Silicon Valley, there's a whole school of thought. Yeah. And it's not dead.
Right.
But what that leads, the next statement is, with AI, you get to pay for what you use. So if you think about some of the browser-based tools, like I use a couple where I get credits. So there's a monthly fee, and until I exhaust, until I a fee for credits, and when I exhaust those credits, I get more credits. That sort of consumption-based pricing is an active conversation within our world. My market sizing it was novel 13 years ago when I started sizing the market, to say, there's all this theoretical market sizing and nobody's basing it on how this stuff is really purchased, the PEPM model. And that it was the move to the cloud that was happening. So I started doing that, and then expanding countries and categories. And now I'm looking at, does this need to change? How does it need to change in order to align with the actual way folks are buying the software today? And what I'm finding is, in certain areas that were already consumption based, like, something to do with job advertisement flow, or something that was already transactional, it's easy to convert to a consumption model for your AI, because customers are used to budgeting with a lot of variable, costs. For an HCM, payroll, talent management, talent acquisition platform, they don't like variable costs. So they like to know, this is what it will cost me this year, and maybe even for the next 5 years. So that's the trying to provide value on both sides, maybe a price that is, there's more value. Customers are generally happy to pay more. I think a hybrid model is where we end up, at least for the short to medium term. But I'm actively watching it, but I haven't seen anybody go. I don't know if you're aware of anyone. I haven't seen any actual platforms go full on away from PEPM.
Yeah.
Not away, but there were some discussions at HR Tech floating these sort of ideas. We're really spilling the tea here now, but one of the things that will be asked of, I guess we'll call it the broader analyst community, is almost doing sort of focus groups, or these sort of testing models. What do you think of anything from this name to this pricing model to this market positioning? So again, I guess this is a little bit of an educational podcast, because that's something they'll ask, and that was one of the things they asked. What do you think people would think if we started using a token or a credit model?
Yeah.
Here's some tea. I won't name the vendor, because I can't. But
we'll bleep it out.
In this context, talking to a CEO, and gender is not implied, so we can't track it. They said their agents are getting really expensive. and that cost is going to have to get covered. So while they're releasing these new agents, developing and releasing these new agents, they're not sure the customers really are anticipating that, and they're almost planning for like a partner model where they can come in with alternatives. I found that fascinating because all of this is right now, a lot of your AI use is being subsidized by the sort of growth at all costs approach of the AI foundational AI vendors. But that is a window. And so, and the more complexity I bring into this, the more compute power I need, the prices will go up.
We've been talking about this a ton on our podcast. On Cliff constantly brings in like, this is the real cost. Like, are you like, we were literally like Microsoft's losing $10 every time they sell a Copilot, right? Based off of our calculations, those kind of things, right? So we did ask this year how willing the HR was to pay for additional AI. We literally have that question, and we added it like, you have low interest in paying extra. You will pay, but you have to see the value, like ROI immediately, or you are willing to sort of take a leap of faith and pay, right? Which is a higher interest, right? Because you know it's going to be valuable. 57% said low interest to pay, right? So basically they're saying unless there's some sort of mirror, something that you can prove, not even just ROI, but that there's real, like a big change of something I'm getting additional, they can't get that past their budgeting, right? Like their budgets are not going to be able to be like a line item that says AI, and that's why it's costing more. They're like, yeah, that's not going to fly with my CEOs. I had Active Eyes, who is was on a panel that we did at HR Tech, who is the CHRO for one of the very large hospital environments. She said she had 2 big AI projects this year they've been working on for a while that got canceled, right? Which I think, I think I had said at the beginning of the year, like if AI is in it, your budgets are more likely, but I think that phase has passed. Our data is now showing that because practitioner CEOs are saying we want to do both increasing revenue and reducing costs. You've got to show that there's going to be value in that AI. So the other thing that we're seeing is that what we've been talking about, and I think we are starting to see some vendors go this route, is instead of like paying it like this AI costs more because they're just not going to use it, which means they're not going to start adopting, which means they're not going to get value out of it anyways, is sort of that up the price of your overall platform, and then because they're willing to pay an extra for payroll, a little addition, right, more because they can get that through their budgets, and add automatically the AI into that. But I think that gets to your conversation. And then at that point, at a certain point, when you start to use it and get value out of it, then start the consumption-based model. So I think that's the hybrid we're seeing that vendors are kind of going to. But I think it's a bit of a scary proposition for the vendors for that exact example you gave, because they don't know how many people will take advantage of that free version, right, that they're giving. That's part of their overall base, and that they've costed in enough for that. Right?
Yeah. Yeah. And then you have to start thinking about, and that this is where you come in with some real interesting data, is adoption. So the, one of the welcome, I'll say that one of the welcome talk tracks at HR Tech was that the adoption and the hype aren't aligning. And it aligns in spots. And as far as I can see, the through line is massive transactional volume, a high cost, a real clear through line to ROI. There, customers, HR buyers have been willing to take the leap into conversational AI, et cetera. But otherwise, there's more fear over compliance, security, just overall understanding, because we're all learning this at the same time. So that I'm dying to know what your data has said about, where is it being adopted? Because I've got my view, and where are we headed? What's next on that adoption curve? Or I don't know if you can share that yet.
I can share a little of it because we did put a little bit of it out in the market. We're at about 31% adoption right now across the board for organizations who have somehow embedded it in an HR process. Like it is part of something they're doing with HR within HR. But that's a combination of tools they're creating themselves through sort of models that they have already, like a ChatGPT or something, right? That they've sort of built their own sort of models within the company to do with that, right? And embedded. When we look just at embedded HR, is that I have built something inside of my system and they have to pay extra for it, right? Or they have to turn it on. Like that's the way we look at embedded. You have to turn it on or it's a pay extra, but it's built inside my system. That's only at about 12%. And
Okay.
that's the highest at HRMS. Even recruiting is at 11%, which I think people would have thought was higher. And then when you get down, it goes down to like 4% for sort of help service deliveries, and much lower as you go down to like learning is at like 9%, 8%. So the adoption and at enterprise level, if you companies over 5,000 jumps to just like 45%, but it was at 40% last year. So it did not go up. I think people who adopted it early, then there was that fear. And we actually saw people start to pull back and turn it off because of cost. Number one reason why they're not turning on AI right now at the 5,000 plus employee size is cost, right? Not a knowledge, not data issues, it's cost issues. So I do think the vendors have to get this right, because they're not just going to, like, we know people who are turning off Copilot because it's not adding value to them right now, right? So I don't know, Cliff, anything else you think that kind of sits in that conversation there?
So for those of you that are just listening to this, if you see the video, you'll see that this happened. This is just a little side. This just always cracks me up. Stacey is pulling these numbers out off the top of her head, and they're right. I've got the chart in front of me, so I'm like, wow, how is she doing this? It's just fascinating. I was like, if you see the video, you see she's not cheating, but I am. So really fascinating stuff, and just weird that you can do that.
I really thought you had numbers in front. I thought that's a superpower. That is a superpower.
Yeah.
Yeah, absolutely. The only other thing I'll add on to that, and we haven't really talked about too much, is the sort of guidance and I guess the legal aspect, which we've talked on a little bit too. One of the things I would say is was unwelcome statement that was brought out, George, was something we talked about last year, is what sort of guidance, what sort of strategy do organizations have for using AI in a sort of legal and ethical manner. And last year it was 56% of organizations basically didn't have one. Either they said they don't know or they don't have one. I'd say those are functionally the same answer. When it comes out to it, that number's only gone down to 54%. So basically what's happening is we're getting more and more tech that's rolling out faster and faster that is, depending on your level of hype believing, is going to change the entire world, or, is going to, end with us all being hunted by robots, right? But either way, we have not done the sort of HR things we need to do around this, right? Of setting guidelines. We cannot wait for the regulatory environment, although we need to be aware of it very much so. We have to sort of understand the guidelines. And I think that actually factors into costs a little bit too, right? Because if we're using it for all these functions and all of a sudden it goes away, do we remember how to do this? Do we have processes in place to sort of get this work done now that we're relying on a technology that may be out of our price range? So it's little things to think of. I'd say that's the one data point that I always like to be the, little sourpuss and bring up, is that, yeah, there's a lot of excitement here, but we have to set some guidelines. There was an interesting conversation with Microsoft CEO that we just talked about on the podcast, where he actually suggested maybe we need to create some friction in releasing these technologies, make them a little more difficult, make the access harder, because they need to be rolled out slower so that we can sort of build out around it.
As Microsoft stocks drop, as he says, and on the investment side, right? George,
we lost one listener.
Yeah, this is one conversation. I think this idea of, so it's going slower on the business side, but I think, and it gets back to that piece that you were talking about with the investors and what they're looking at, and the how to offload maybe some of the cost from the vendor's perspective. The end users themselves, who are just using AI through their sort of general models to do their work, that now is much higher than I think people even are giving that credit for. So 81% of HR professionals said, I am using AI on some level to do my job better. So they're using, and when we ask them what it is, it's a mix of Microsoft Copilot and ChatGPT, and then like Grammarly and all the little guys that go after that, right? So all the things we're all using, not as part of the HR process, but just to do their job, their personal work better. And I had a conversation with one of the vendors, we won't mention who it was, and we were talking about cost. And I said, this bring your own AI conversation is big, right? Like, I'm training my own AI tool, whether that's ChatGPT, Microsoft Copilot, whatever, that has a better understanding of how I work better. So if that's leveraged inside the company, it will make me a better employee, probably, right? There is risks with data, because only about 14% are paying for a version, and only about 30% have the company paying for it. So there's about 40% who are like using a free version to do that, which is, there's a whole lot of stuff on that. But the vendor and I had this kind of back and forth, and he goes, well, yeah, there will be things like SaaS. We don't pay all the cost of all these SaaS tools that come into the company, right? Like that server model space, that's sort of outsourced to what other individual tool they have bought into, and we allow that tool to connect to our system right now, right? With all the security protocols. So he's like, will that be the employee will pay for their own cost of AI, and we'll eventually allow that to connect in, and that will save us the cost. Kind of your sense that the vendor saying the partners might pay the cost. Will the employees pay the cost? Kind of like I have my own phone now. I don't know. Do you think that's going to be realistic for them as well?
I don't have the answer, but my feeling is this is not going to be like bring your own device because, looking at IP that the company takes very seriously and uploading that into a public GPT, that's a problem. And I think the info security folks are going to start to really put rails around what you can do. Now, using your own version of Copilot to help you write better emails is fine. But if you're writing a better email about last quarter's financial results that the CFO will present in the earnings call, not okay. So,
Well,
this is the thing. I think I think that's coming, and I don't think people are, to your point, really thinking about how that speed bump when it hits, it's going to hit because of that email that gets leaked and the stock market reacts before the earnings call or something like that.
yeah, I was just thinking this came up directly during my meetings. This one I can't say the company names. I'm talking with iSIMS, right? Very large talent acquisition company, and we see in terms of use cases within just what are you using sort of machine learning, a chat GPT type platform for, directly in terms of tasks. We see writing job descriptions. That's number one. And so people think, well, that's harmless, right? It's like you said, oh, I'm just summarizing emails or something like that. But what iSIMS is making the point of is that companies are already going to them and be like, how do we get people to use your program, to use your thing for writing job descriptions? Because when they're writing it to a public version, that is still enough information to gather quite a bit of knowledge about where a company's going. If you're writing 700 job descriptions about people that you want to hire in Peoria and they can see that they're coming from a company, like I could get a pretty good guess that they are putting an expansion into that place, right? That you can start to take that data in aggregate, and that's company very sensitive information, confidential information, competitive problems. So it becomes an issue for these companies to say, how do we sort of try and maybe not scare people, but make people understand the risks involved in what seem like mundane, no problem tasks, because taken in aggregate, they can cause an issue.
Yeah, and there are where it really comes into focus. If there are some folks bringing these GPTs out, it's like consultants like to do this. So I'm a hiring consultant, and I'm in the world of recruitment, and I've built a GPT that takes everything I know and it embeds it, and you're able to go to market with your process. Well, it doesn't scale. So I've got like one process problem, which is one recruiter using this on their desk, and suddenly it's different, and I'm not capturing the data. Things aren't being updated in this case, iSIMS or whichever system. But then I've got other systems I'm aware of that are being rolled out as almost like an intranet or an ops platform. And it's just a bunch of GPTs that have been built. And that's really scary to me as an IT person, that all of this data is going, to what looks like an intranet of GPTs. And all of that exposure, I just think there's reckoning coming for sure on that front. But things are going so quickly that, it's like whack-a-mole. So we haven't gotten to that one yet, but it's on its way.
One of the things we track when you talk about our adoption numbers, we track adoption, we talk about RFPs, and then what people are planning to go look at. So we do this sort of evaluation number, right, and changing systems. So we have all that data, and the evaluation of the AI that's double and triple what it is the actual use right now in almost every category. So we know evaluation is huge on all this. But I think to your other point, certain things that are starting to show us kind of where this kind of is coming to is something like productivity tools, which for us would be Microsoft, Google, Slack, all the things that you would use to kind of work within your teams, work within your environment, right? We just track those generally because people always, if we don't add them to our list of systems that you have for your HR systems, people will say, I use Excel, I use, Team, or I use Microsoft. And so it gets a little bit weird. So we have that as its own category. And every year it's like a couple, 2 or 3% in all the categories, and it always goes down, it never goes up. This year is the first year it's like 5 and 6%, which we haven't seen that since like the days when people were developing stuff when we were tracking it, right? And it's not going down, not always going up, but not going down. What we're thinking is that, to your point, is people are taking the chat GPTs, the models, and they're wrapping their sort of work tech around them.
WorkTech.
Yeah, call it. But they're not, and they're using that as a major part of their HR ecosystem right now, as a tech tool. I don't know how that fits in those small companies trying to make businesses out of that you work with. Like, where do they fit in that picture, right?
Yeah, I think that's a whole other cliff that a lot of small companies are heading toward. Oh, cliff, different kind of cliff,
our names different
kind of cliff. But I that's, in some ways, that's, still in the world of startups. I see a lot of solutions looking for a problem, but I see a lot more, right? Because the cost goes down, and a lot of folks are, they think they're building a better mousetrap when actually they're building one piece of the mousetrap, and they're not thinking about these other implications. So I think that's definitely an issue. I keep forgetting, this keeps like floating in and out of my mind. The new buzzword that I've seen just lately is ambient AI. And
yes. Explain that for the audience, because I've heard it, but I've heard it used a couple different ways. What is ambient AI now?
Explain it for everyone else. I know what it is, but
so what the definition I've been seeing is it's just a buzzword to put on AI in the flow of work. You made a point earlier about, buyers waiting, and how that has sort of paid off for a lot of buyers, because things keep, tech has been catching up to expectations. When I look at the world of, platforms, you've got a bunch of folks that are racing toward agents. They're announcing numbers of agents before they even have a definition for them. Then I've got folks who are saying, platforms that are saying we're full on AI now, but we are embedding it and we're giving the customers control, and we have agents planned that they can turn on or turn off. And that's more of that ambient world, where it's like I'm using a greenhouse. You mentioned iSIMS, and I can sort of pick what I want to use, or I'm using an SAP, and I'm not saying that any of these have like a fully defined ambient strategy at all, but just as platform examples where the AI is helping me, but I don't necessarily, when I go to schedule my shifts, and the system, automatically starts recommending, the employee mix based on overtime, based on all of these things. It's leveraging AI, but that's not important to me. What's important to me is getting the work done. And I may know I'm using an agent over here when I need data to pull into my presentation to the board, right? Something like that. So that, I wonder if in the world of investors, I see this where we're gonna put a bunch of chips on this roulette number that is agents, and then come over here and put a bunch of chips on these ambient players and see how it goes. Then I wonder if buyers
and then the other chips are all going to go on something like a fair now that's going to track all of this, right? Because that's the other side of that business, right? Or an eye that's going to tell you can't use any of it, right? Or where it's being used.
Yeah. It's disappointed not to see more governance related tech. There's a lot of it out there, and I think part of the challenge with governance is it sounds like regulation, but it's really just your own, standard operating procedures, your own rules that should comply with regulations.
That surprised me that you're not seeing it. I was hoping it was in these early stages. I know of the two that I kind of track, which is we track Fair Now, we track Lanai, and there's a couple of other little ones, right? but you're not seeing as many, it sounds like, and that's concerning a little bit, right? Because they should be in early stages at this point, right?
Yeah, there might be one that I said, Warden is another
No.
one that has come up, but they're all a little bit different. I see, as I'm tracking all of this in our space, I see much more activity sort of broadly focused on governance, but you really do need to have a lens that's pointed at HR in order to get it right for, the
Yeah, one stat, and then I know we're going to do a round robin because I know we've all got meetings and we're going to run over a little bit. But one stat I just want to throw out there is that there's this question we ask about how strategic do you think HR is, and we have all kinds of people who answer our survey: IT, finance, HR, IT, HR, all right. Well, we broke that data out by IT, finance, HR, all the different groups of respondent types. And what we found last year was that IT about less than like 35% or something like that of IT felt like HR was strategic. Like if they're answering our questionnaire because they're answering, they know about HR systems and they didn't think HR was all that strategic. This year that jumped up to 54%. It was the only other group. Like CEOs feel HR, 59% of CEOs feel HR is strategic. Finance, only 38%. Finance does not feel HR. Like none of that had changed from the previous year except for IT. I'm like, this is weak. Like we never have that big of a jump in data. But to your point, my thought on this could be completely wrong. These are all conjectures on this. We won't know until we start doing interviews. IT has been pulled into this world of not deterministic anymore, but probabilistic AI, where it doesn't always have the same answer, yes or no. And they're like, shit, how do I manage a resource that does not have the same answer twice? And the only group that knows how to do that is HR in my mind, right? That's the reason why all of a sudden they feel HR is more strategic than they were last year. But that's going to be my answer for this year.
I think that's valid. I wonder if, there've been one or two high profile, class action suits recently. That helps. I just think that I said it earlier, the headlines about fraud, candidate fraud, the headlines about, and employee fraud, because some of the fraudulent candidates get hired, national security based on, HR issues, and as well as just every headline that speaks to work and the challenges related to AI is pulling IT even further into our world. So maybe I think it's probably a perfect storm. And I'm trying so hard not to say, what I'm trying not to say that like it has to do with a seat and a table, and I won't say it. I won't say it.
Hey, Tom, don't worry about that. Stop that. Because CEOs actually think that HR is really strategic. It is our functional partners we're struggling with. And so, anybody got a good way to get finance on? One way to get finance on board is to understand the investment of the systems that you're going into. So we'll leave that on that note for you, George. Like if you know how much money that vendor is either making and doing, and that might get finance interested in it more. As we're wrapping, because I know we all gotta sort of wrap today. We could do this for hours. I think that one is, we did want to shout out some friends we get our data from. So I will sort of, maybe as we do our round robin for wrap, I'll just note a couple people that I know I work with, and you can mention some of the people you work with, and then we can sort of do that. And then maybe just one sort of vision for the future where we think sort of all of this is going to head, maybe, because all of us, I think, have a unique view because we all look at forward-looking data. We have data that's forward-looking, you have data that's forward-looking, which is a little different from kind of current state, right? So maybe a look at where we think this is all heading. So think a little hard. I'll be the first to go so that you guys don't have to do the first gauntlet. First off, I think, when we're looking at who we get our data from, there's kind of a couple of places that I really look at and we gather data from other industry analysts. So we had this conversation about what is an analyst. And for us, there's a lot of really great influences out there who know the practitioners, who know the space, amazing. But I look at people who gather data like we gather data. So for me, there's very much Red Thread research with Stacey, who gathers a lot of data on people analytics, performance, sort of 10% of businesses, where the market's heading from a really big picture conversation. I also actually look a lot at Albert Peng's data because he he captures a great deal of granular data, not in all the categories we do, but granular data on stuff. Two names I want to bring up, I think people should sort of be paying attention to. And my future statement is really based off of what we're seeing in our data, is that AI will get more money. Like we're gonna keep like this. If you are thinking about investments, if you're thinking about even at the practitioner level, you do have to know this market. It is going to continue to get investment. It's not going to go away. All the risks we're talking about are not going to stop people from doing, I think, AI. So I think that's one thing, is that it's going to continue to grow and be adopted. I think the other thing that we are going to have to be very aware of is that the systems that we are all used to using the enterprise platforms, the technologies that we use for recruiting, the technologies we use for learning and for performance, they are not going to go away, but they might go much more behind the scenes. And we've been talking about that a lot in the past. But I think this is the first time where I'm going to say, yeah, user experience very much could be a list of chat GPTs if they're done effectively for your business, that's then pulling information from these enterprise tools behind us. So the idea of user experience, I think, is going to change dramatically in the next 2 to 3 years, more so than I think we're really. So those are my two predictions for where the market's heading. George, how about you? And who else would you say we recommend people visit for data?
I'm with you 100%, and you're on the top of my list for Sapient for the
Oh,
broad,
same thing.
market,
Yeah.
and on Red Thread, 100% for talent management. I think I'll add for talent acquisition, and I'll leave some room for Cliff to mention someone as well in another category, stealing the oxygen, but it's aptitude research, and Madeline Lorano runs aptitude, and just very like you, like Red Thread, credible work, good data, puts the work in, and always willing to share and collaborate. My with you on the next couple of years. My market thesis right now that I'm working on is this platform shift, and that has to do with the platforms not disappearing, but shifting a little bit more to the background, and this world of AI and agentic AI starting to be the experience, both employee and back office user. I'll give you my next area that I think is going to just get turned upside down and is going to be on fire from an investment and adoption perspective is performance management. That I think we've been struggling with that, with the AI and the implications of listening and all of this, but I'm just seeing, well, I'll say it. I don't have a relationship with these folks, but the founders of Seven Geese, who sold to, I think it was Paycor years ago.
Paycor. Yeah.
That was performance management.
Yeah.
Now they're back on performance management in this new agentic world. And I was looking at what they're doing, and I'm aware of some others like Opry and some others. Again, no clients that I'm mentioning.
Came out as well.
That's right. And
Numbers.
I'm looking at this and saying this is interesting, and it's interesting for HR, and it's also interesting because the buyers and the customers and a lot of times could be the managers themselves, and that's different for HR tech. Anyhow, I think that's the next big frontier where we're going to look back in 2 years and think, wow, we do this completely differently now.
Yeah, I think to your point, the word productivity versus performance management are going to get really tightly connected in that world, right? Yeah. Cliff, how about you?
Yeah, I'll throw out a couple because we've been talking regulatory environments, and I think we talked about in the green room, and I know we've talked about it on our podcast, but I want to mention anyone from the legal world because we always have to be careful. Cannot give legal advice, but there are people who can. Heather Bussing is one. Stacey, help me out.
And Kate Bischoff is probably our
Kate Bischoff, yeah. Right. Thank you. And then kind of leading into what I'm seeing in a lot of the conversation I've had, I'm going to name one more person. That's Mark Smith at ISG. If you want to get into the hardcore technical IT side, because we have been talking about understanding, at least having that conversation with IT, getting into that architecture, because there's something that's happening, Stacey, that is very related to something you've been talking about, we've been talking about, this cluster model of buying, where people are more and more relying on vendor marketplaces. They want that bi-directional data flow. They don't want just open API integrations. And it's leading to these clusters. And I think it's going to be a further conversation. I worry that we are headed towards what we see in consumer tech, the walled garden, right? Everything is great as long as you stay within a very specific area. A lot of the vendors are noticing this, and what they're hoping for is instead creating what I call curated gardens, right? Everything will grow better in this area. You can leave. It's fine. Things will still work, but they'll work better here. And, kind of creating an incentive for everything to stay within. But because of various litigious reasons and possibly some tech reasons, we could end up in a worst case scenario where we end up with only these systems will talk to each other and you'll be locked into certain marketplaces. So I think that's a broader conversation and kind of relates to everything we've been talking about and how these systems connect, how they're paid for, et cetera, et cetera. So that's my thought on it.
I think that's a regional conversation too, and government conversation. Ooh. We're hearing that, right? Like I know, I don't know, George, if you're hearing this, but we are definitely hearing like, well, are each of the countries going to start to wall off, right? What they're doing? And that very same idea, right, of it'll be a smaller world than we've been used to for the last 20 years or so. So yeah. Well, guys, this has been a great conversation. Like I said, we could do this forever. Maybe we'll bring a new group in next time and make it an even bigger follow up. But if anybody's interested in connecting with us at Sapient Insights, George at WorkTech, or both of us together to get sort of a broader view of the market, we'll have contact information below when Cliff puts this out for everyone. And George, do you want to send anyone else to a website for you, or a location where they can get more details if they want it?
Website is the number one, or you can spell it out, worktech.com. And yeah, LinkedIn, I'm on LinkedIn all the time. So
Perfect.
Either way.
He's a great follow. Do that immediately.
Yeah, and same on us. I think everybody knows that we're at sapientinsights.com if they're listening to the podcast. But just as we're kind of wrapping up today, I just want to say thank you to our communications team and marketing team, Kelly, and all of the teams that help us put this together each month. It's really, really important for us to have all the people behind the scenes that make this work, including Summer Rolano, Cole Harris, Linda Galloway, as well as Kate Diamond, and Kendall, right? Yeah, we've got so many new people on the team.
Yes.
Thanks to our listeners and our community. We couldn't do this without you. If you want more details, please go to our website and sign up for our newsletter. That's where you're going to find all the information. And that's it for this very special episode of Spilling the Tea on HR Tech. You got some really inside information today. We hope it's been just the brew you needed to start the engines running this week. And we'll be back in a couple of weeks, because this is probably going to go a little bit outside of our traditional 2-week break, with another pot of boiling hot HR Tech updates and insights. So thanks, everyone.